the open markets in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne, live from the Hong Kong Stock Exchange, where CATL is set to make its trading debut here in the city. The world's biggest listing of the year. The stock set to surge, Dave, at the open after gains in the gray market.
Yep. Are you ready? It's getting loud, as you can see there behind, and as you can hear behind Yvonne. I'm David Ingles. Welcome to the show. Let's get to your top stories today. Stocks in the Asia Pacific in the green as U.S. futures rising. That's thanks to dip buying on Wall Street. You have investors moving on from Moody's downgrades of the credit rating. They're pushing the S&P close to entering a bull market. Now, President Trump saying Russia and Ukraine are set to begin ceasefire talks following a 2-hour phone call with Vladimir Putin. Again, welcome to the show. We start things off today with some breaking news coming through. Loan prime rates out of China, 1 and 5 year. Are both cut, respectively. So we're looking at a 1-year loan prime rate down to 3%. The 5-year is taken down to 3.5%. So, yeah, lots to talk about as it pertains to that. There's that story. There's the CATL story. There's the rally taking place. The continued bounce we're seeing in the Treasury market, plus some earnings coming through as well that we'll get to in a moment here. But, yeah, the big story is out of CATL. And as Yvonne is pointing out, we are poised to see the world's biggest listing this year pop in its first day of trade in about 28 minutes or so. So we'll see what that looks like. When you look at gray market indications, yeah, we are going to get a price higher than your listing price as well. Let's have a look at where we are on dollar China, please, if we can. 721, excuse me, 71 there against the dollar. 2-day look, 1-day look, as we can see some strength, a little bit coming through right now compared to a few minutes back. The approach to the open today, Asia outside of China, is one where we are getting a rally across risk assets. And as you can see, Asia is up 0.4 to 1%. Nikkei all through the TAIEX index, which is opening up right now, 0.8 to 1%. It's a mixed picture. It's the opposite, in fact, when you look at the Treasury market, where you had the opposite taking place yesterday. But it's a reversal again today. So, again, we're down on the short end. We're up on the long ends as far as the Treasury market is concerned. A couple of other things. We have several bond auctions today. Australia, Philippines, Japan is auctioning a 20-year. And then we have a rate decision coming through out of the RBA today. So lots to get through. But yeah, our top story today, 4 letters, CATL. Vaughn.
Yep, and certainly the ceremony is underway here today. We're expected to hear from the founder, Robin Zhang, to give his speech leading up to this listing. And we just heard that the Treasury Secretary, Financial Secretary Paul Chan of Hong Kong is here as well. It's a big day for Hong Kong. It's a big day for CATL. You talk about how the shares are indicated sharply higher here today. The gray market, we definitely see the movement there. And this was heavily oversubscribed. They're talking about more than 150 times. And given that the shares being traded at 263 Hong Kong dollars a pop, that's only about a 6 to 7% discount from the Shenzhen listed shares' last trade. So they didn't need that massive discount to get investors in. The foreign interest is there, Dave.
I mean, it certainly is. And yeah, I think what a time to also be listing. And I think despite the uncertainty, I think is the takeaway there. We are getting this come through priced, as you point out, at the top end, and in fact, getting an even upsized portion as far as that is concerned. So in case you're curious, it's 37.50. That's the ticker here in Hong Kong. And we're looking at, yeah, in fact, I'm already looking at $290 a pop here. 263 was your listing price. And, yeah, initial volumes coming through, about 130,000 so far going into the open today. Yeah, so we'll revisit the stage there where Yvonne is. As you can see, Paul Chan and executives from the company there as we go into the world's biggest listing of the year, 25 minutes away. And, yeah, we are likely going to see this fly in the opening minutes. Right, now away from CATL, and speaking of the macro picture and the Fed, you have Atlanta Fed President Raphael Bostic says that he only expects one rate cut this year due to tariff-induced uncertainty. Have a look.
If it takes negotiations a longer time to settle things out, we have another 90 days on China, for example, that starts to push much further into the summer, in which case we won't actually know what the true effects are going to be for several months after that. If that's how it plays out, then sure, I think, and right now I would say in my SCP I have one cut only for this year because I think this is going to take longer to resolve than it might have otherwise.
Okay, let's talk about how this affects the investment environment out there going the next few months or so. Helen Ju is with us, managing partner and CIO at Trinity. Oh, Helen, nice to see you. And if I could just ask my producers, if you could lower the volume, please, out of the exchange. Thank you so much. There we go. It seems higher rates. I mean, we had the Moody's. Now it looks like the Fed might not be able to move as much. What does it mean in terms of just how attractive different assets are at the moment?
I think higher rates may not necessarily be such a bad thing unless they go up a lot higher versus where they are now. If it's really just because the economy continues to be fairly robust, I think that's actually probably going to be good for U.S. equities and global risk assets. In fact, I think the biggest reason for potentially cutting rates more than expected is if there is actually more signs of recession coming, whether that's a result of just the natural progression of things as the economy has been red hot for so long and naturally things are starting to weaken, or because of the uncertainties introduced by all the trade negotiations. So generally speaking, I think if we don't see a further pop of 20 basis points, 30 basis points, 50 basis points for the reasons of people losing confidence in the U.S. Treasury and the U.S. fiscal situation, then I think the rates at kind of like low to mid fours is actually okay.
Both scenarios don't seem to be constructive, though, for U.S. equities, is what I hear you saying there indirectly.
We're not super positive on U.S. equities at this point in time. If you actually look at the month of April alone, the U.S. equities were completely flat for the month, which is counterintuitive given all the things that happened in between and the huge volatility that came mid-month. But we do think that by this point, the market has already priced in that probably the average tariff for the U.S. is going to be 10% and maybe China specifically around 30%. So that's probably already a best case scenario in terms of where the tariffs settle out. People also have pretty high expectations regarding the passage of the Big Beautiful Bill, which is going to be potentially at least near-term stimulative with all the massive tax cuts, albeit medium to longer term. Who knows what that does to the fiscal picture. So I think the market has kind of priced in a lot of positives on the U.S. equities already. So we actually think that fixed income might be a little bit more interesting at this point in time with the Treasury close to 4.5%. If it goes up any further or significantly further, I think actually Vincent and Trump have mentioned they actually wanted treasuries to come off. They wanted the 10-year to be closer to 4, maybe even lower. So I think the risk reward for fixed income is probably better versus U.S. equities at this moment.
We did see that when the 30-year hit 5%, dip buyers came in, and we're back to 4.9 right now.
Exactly.
Can we put the Moody's announcement behind us? Was that more a statement of fact than something descriptive of perhaps what's ahead?
The other two agencies had already changed their ratings back in the last 2 to 4 years. This is more of a lagging effect, but certainly the timing was a little bit destabilizing in terms of sentiment. But I think the actual fundamental message is not substantially different versus what we had seen previously, which is that the U.S. fiscal situation is still precarious and we don't see a definitive solution on the horizon yet.
We're almost done with earnings season, just about, in China. What's your takeaway so far? Any surprises, good or bad?
No major surprises, but I think on the internet front, actually the numbers in general, especially in terms of top line, were not quite as bad as what people had previously feared.
Yep.
Although, if you actually look at the amount of investment that a lot of these companies have to do in terms of AI, CapEx, and data center build-up, et cetera, maybe on the margin side, there would be a bit of further disappointment. So I would say, nothing of meaningful significance that was a huge upside shock or downside shock, but certainly we don't see the economy getting substantially worse versus where we had been, last year in the third quarter before all the policy loosening started. No V-shaped recovery yet either, but things not getting substantially worse.
Yvonne's about to say hi to you.
Hi, Yvonne.
Helen, it's great to see you. We're live here at the stock exchange, and certainly we're talking about the world's largest listing being here in the Hong Kong once again, and maybe that China renaissance, it could come back to this Hong Kong IPO market. I'm just wondering, if it's not U.S. assets now, do you rotate to China? How much sentiment, optimism is there around sentiment now in China?
I think there are certainly, specific subsectors that are quite interesting that are probably undervalued and have actually seen a lot of valuation derating over the last 2 or 3 years. But I would say in general, a lot of the large index constituents like the banks, the insurance companies, the telcos, a lot of these central SOE companies that are large weightings in the index have actually performed pretty well already. So may not necessarily have as much upside as before. A lot of these were bought for their dividend yielding characteristics, given the domestic onshore, bank interest and overall borrowing costs and savings returns have come down quite a lot. So I would say a lot of those stocks used to trade at 8% dividend yield, maybe even higher. Now a lot of them are around 5 or 6%, so less interesting versus before. We actually now prefer other parts of Asia as well as emerging markets over China in terms of non-U.S. exposures, and we think that as the U.S. dollar continues to show that it's not going to rebound back to the January, U.S. exceptionalism levels of when DXY was 109. DXY is now at around 100. If it doesn't have a meaningful rebound, then we actually think that emerging markets and other non-U.S. markets might perform better than China or the U.S.
So tell us more. Outside of the China story, you mentioned others in EM, so what would come to mind to you at this point?
For example, we like Korea, right? We think that's a market that's been bogged down by, very weak currency, a lot of political uncertainty, okay. Obviously trade-related risks as well. We're likely to see an election in a couple of weeks' time to clear things up. We see that the dollar is no longer pressuring the Korean won the way that it was previously. We see that large caps like Samsung have been trading at very, very low multiples for quite some time, and we could see some kind of rebound in terms of sentiment towards the whole AI and semiconductor complex. Japan, not part of EM, but is also quite interesting within the region. It was really pressured before because of the currency strengthening. Now, I would say the risk-reward on the currency is a little bit more balanced versus before. We like, for example, some parts of Southeast Asia that got crushed earlier in some parts of Latin America as well because of significant uncertainty around the trade and significant pressure from the U.S. dollar, all of which is wearing off. And some of these countries might actually have improvements in terms of the monetary policy outlook as well as the political outlook.
I didn't hear you say India there. Is there any reason that's an exception? India's also rebounded. I think the market's actually led the rebound since Liberation Day.
India has always been trading at very, very expensive valuations, huge premium over the rest of the world. A lot of that has been propped up by the retail sentiment, very similar to where China was, a few years ago. So, we still like the broader structural backdrop for India and also the lower energy prices recently because of the progress in the Russia-Ukraine situation as well as the weaker demand-supply picture elsewhere. I think those are all positive for India, but we don't see as much upside for India as we do see for some of the other emerging markets.
Anything to avoid? Last question. What's going to be a mistake?
We think U.S. equities are looking a little bit toppish at the moment. So that's probably where the risk-reward is not super great
favorable
at the moment. And, we also think that gold has gone up a lot. I mean, certainly there is a loss of confidence in the dollar. But, this type of surge, 1 or 2 central banks really pushing it up recently and a lot of retail money flowing in. I would say the risk-reward there is not as great as where it was 12 months ago either.
Okay. Fantastic. Thank you so much. Helen Zhu there, of course, managing partner and CIO at Trinity. We covered everything there. Right. We're going to get more analysis coming through, of course, out of CATL, that Blockbuster listing here in the city. Yun Mei will be joining us out of Great Wall Securities. We're also going to take you straight live, of course, back to, and the story is big enough to take Yvonne away from us here in our studios onto the Hong Kong exchange floor, where you're looking at Hong Kong Financial Secretary Yvonne Paul Chan. What's he saying there, Yvonne?
Well, I think for one part, it's a big day for Hong Kong, right? We talk about how we've seen a lack of risk appetite for listings here in the city for years now. And this CATL secondary listing single-handedly doubles the proceeds for Hong Kong listings this year. So it puts Hong Kong Exchange in some ways back on the map here. And it is certainly a big day for CATL. They've been looking to diversify its shareholder base, right? Tap into a global capital, just given the fact that, of course, there are the U.S. trade tensions and the like, but also the proceeds are going to go to their international expansion, particularly when it comes to Europe. Keep in mind, $50 billion in revenue, only 30% comes from outside of China. So that's where the opportunity lies. They're building factories in Germany. They're building factories in Hungary, a 7 billion euros one there as well. And really all those moves to try to avoid U.S. tariffs in some way and look at more profitable markets outside of China. We've got plenty more to come. Of course, we're going to get to that gong ceremony in just about a few minutes' time. The founder, Robin Zhang, set to speak here at the Hong Kong Exchange. This is The China Show.
Right, welcome back. The big party in town is down at the Hong Kong Exchanges. CATL is poised for its Hong Kong debut, biggest listing of the year. In the pre-opening session, we're now looking at 291. So give or take, this is probably going to be a 10+% pop in the opening minutes. We'll find out in about 2 minutes or so. We're looking at volumes right now in the pre-opening session route topping. I'm looking at my Bloomberg screens here, 3 million shares. So this one is as active as it can get. Right. Apart from that story, of course, the other big one is with President Trump, Russia, and Ukraine. And according to you, as President Trump, he says that Moscow and Kyiv would be starting their negotiations as it pertains to this ceasefire immediately following a 2-hour phone call with Vladimir Putin. Let's bring in Bill Ferries, our senior editor, who's with us out of Singapore, for what we know so far based on what the U.S. president said, Bill.
Yeah, so we have this announcement from President Trump after his two-hour phone call with President Putin of Russia, and he making this announcement that talks will begin between Ukraine and Russia over some sort of a ceasefire. And he said even that the Vatican potentially could be hosting these kind of talks. But it actually raises almost more questions than answers at this point. There have been talks going on about a potential ceasefire for a few months now. They just haven't gotten to that point of accomplishing anything. Russia has unleashed some of its biggest drone barrages against Kyiv in the last week or so. And it's not clear that Russia really agreed to any kind of concession to get to this stage. So when you talk about the idea of having talks to get to a ceasefire, that's the kind of thing that I think European allies are already saying that they are worried could drag out quite a bit of time. So a lot of details still need to get filled in here. But President Trump having that phone call, his third with Vladimir Putin since taking office, trying to find a way to get these two sides to a negotiating table.
Yeah, Bill, let's, again, to your point, it's important when we get these things to temper our expectations and sort of ground us really into what's really going on. So what would be the next things you suggest we watch here?
Well, I think the European allies spoke after this call, after they spoke with President Trump. They say that they are still likely to move forward on some sort of a sanctions package targeting Russia's financial sector to help pressure it, to try to pressure Moscow into making concessions and going to the table. I think there's a big question now. We'll look to the Vatican about whether they really are agreeing to host some sort of peace talks. The biggest question is going to be who's going to show up at these talks. Is this going to be a high-level delegation from Russia and Ukraine empowered to make decisions, or is it going to be more like the team we saw meeting in Turkey about a week ago, which was much lower-level officials who really don't have the decision-making power needed to bring an end to this conflict?
Bill Ferries, thank you so much. In Singapore for us and the latest on Russia and Ukraine, and certainly what the U.S. president said in terms of guidance there. Right. In other geopolitical news here, China's defense minister is reportedly set to skip a defense forum in Singapore next week. Now, the FT cites sources who say that China has signaled that Admiral Dong Jun will not attend the annual Shangri-La Dialogue. The event is seen as the premier military gathering in Asia and has become the main forum for U.S. and Chinese defense ministers to meet and have a conversation there. What a point in time, of course. Anyway, we'll revisit that story a bit later on. Just very quickly, we're now looking at CATL. And first day at office, 13%. in the pre-market right now. $33 to the upside, nearly 296, 296. We're looking at 300 right now. So yeah, we'll revisit this. And as you can see, of course, the executives are speaking following the Hong Kong Financial Secretary. This is the world's biggest listing so far this year. Plenty more ahead, including a deeper dive into the company, into the sector, plus a look at how this affects the opening bell. You're watching The China Show. Good morning. Good morning and welcome back. You're watching The China Show. To your right, the world's biggest listing this year, surging 13%. First day at school. To your left is the founder of the company, Robin Zhang, speaking there at the Hong Kong exchanges. It's quite a milestone, of course, in how far we've come, really, as far as the listing market sentiment, Yvonne, is concerned, and really quite a big way to mark this, given all the uncertainty out there. What are you hearing on the ground, Yvonne?
Yeah, you're hearing Robin Zhang, the founder, now speaking ahead of this listing and certainly talking about this mission to enter into this zero carbon world, right? And now they're trying to put CATL as the forefront and the leader of that sort of mission. And certainly that is the pitch that Zhang is going to have to global investors out there. He wants to put CATL on the map as a global company. Keep in mind, despite all these U.S.-China trade tensions, right? We heard about that Pentagon blacklisting of the company. There also has been CATL excluding U.S. onshore institutions into doing this deal. So they are limiting the amount of U.S. investors into this stock. So certainly that's going to be a key focus here. Can they actually raise global capital, raise a lot of funds without the help of U.S. investors?
That's going to be the big one. And of course, almost right on cue there. We are approaching the opening bell with a bit of fireworks. We'll see in a big gong, of course, in the background. And as we look into, of course, the world's biggest listing this year, CATL, just some context there as well, right? It's China's 11th biggest company by market cap. When you go into today, of course, that takes you from your Tencent, ICBC, Alibaba, your Xiaomi's of the world, and you make your way down that very short ladder onto you get to about CATL. We'll see what happens with that, of course. And we'll continue the conversation, by the way, as far as the sector is concerned, right? So we're really covering this from a lot of angles, from the sales side, on the company itself, from some of its peers, its customers, and partners, in fact, just about across the world. So we'll see what happens with this. 13%. What are they doing with that money? We've seen things like margins, scale, first mover advantage. Those are the elements that certainly make up the moat of this company. What are the weaknesses when we look at this as well? As I guess on a day like today would be good to revisit, given the exuberance out there in your pre-markets right now. 13% to the upside. We were almost at $300, and I would imagine 300 Sanbai Gangbi is doable. We'll see in the opening few minutes or so. We're looking at this, rate cuts coming out of China, loan prime rates, the opening bell. In just a few minutes or so, futures are doing this, and we're looking at a rally across risk assets in the region. What a day to be listing. The opening bell, and this one coming up. You're watching The China Show. Good morning.
We are live here at CATL's listing in Hong Kong. That gong ceremony just underway here, and really a big day for Hong Kong, a big day for CATL. We've been talking about the secondary listing for maybe about 6 months now, so it was a pretty swift kind of turnaround. But then again, it's been a years-long plan and anticipation for founder Robin Zhang to put CATL on the map. They already are in many ways a global company. You talk about them dominating. They are the champion of the EV battery market. They have a top-tier customer base. Just think about any major automaker out there, and the technological innovation. This is where China dominates when it comes to this U.S.-China trade rivalry. But there you go. Here is the gong. There you go. indicated higher here, about 10 to 12%. We'll see how the shares fare. But 263 Hong Kong dollars a pop for the stock that is marketed at the top end of the range. So this looks like this stock could fly at this open. And certainly a lot of anticipation on what this means, right? Because the discount between the 8 shares and the A shares, Dave, is not a whole lot. We're talking about 6 to 7% of a discount only. But that just goes to show how much of an interest there is from foreign investors here. And really, it seems like they're brushing aside some of the concerns between the U.S. and China.
Yeah, absolutely. So, yeah, you have okay, look at near pandemonium. I would say near unbridled optimism there on the stage. It's Bonnie Chan, you have Paul Chan, the executives of the company. I think they're just trying to coalesce everyone for an orderly photo shoot as we mark the opening bell. We'll show you the price in a moment there. So we opened at about 294, 295, I believe. 260, closer to 260 was the listing price, 263 to be exact. We're now trading at 291, 292. We're looking at volume surging in the opening minutes here. We're looking at 6.5 million shares traded already as I speak, and that's going up in multiples of 10,000 with every word I utter. We'll revisit this in a moment, but yeah, there's a lot of volume coming through, although I should mention too, we're slightly coming off highs of today. Very quickly, what's the background like as they toast, I hope that's champagne, at 9 in the morning. Anyway, there's good reason for that. Here we go, a 10.1% onshore in the Shanghai Composite. And yeah, let's flip the boards, please, and also have a look at Hong Kong and the open here too, and what it's looking like. And we're looking at a 1% to the upside. I mean, certainly a day when the focus is solely on one single stock. This side of the world, at least for the next few hours or so. We're now looking at 291, 260, 10.8% to the upside here on CATL. Just some context here, right? I think we talked about this earlier on. This is by my count, and I'm just doing very, very rough calculations based on the Bloomberg. This is China's 11th biggest company by market cap. So you go from Tencent, you go to ICBC, you go Alibaba, all the way down, a very short list, and it takes you to CATL at number 10, number 11. Anyway, we'll try and take it straight back there to the floor where, of course, Yvonne is for us covering the big story of the day. In the meantime, though, I think, why don't we carry on this conversation, guys, and let's see. Oh, yeah, okay, I believe we have Yvonne back. Yvonne, do you hear me?
Test. Yeah, I can. I don't know if you can hear me, but
you can,
it's
right?
very
Go
loud
ahead.
here, obviously, just given that we just started this gong ceremony. There is Robin Zhang there on the stage. And you talk about the allotment, right? So 8.8 million shares are allotted for retail investors only. So for a lot of investors out there and analysts that talk about this stock, it's a very small slice of the pie, 2/3 of which are being held by cornerstone investors who might not be able to sell, or we will not be able to sell the stock in about 6 months or so. So liquidity certainly is an issue, but for investors it means they have to, it's almost like a no-brainer. They have to get a slice of that pie, even if it is a small slice. So that's where the demand is coming from, certainly. And I'm going to bring in our Asia transfer reporter, Danny Lee. He covers the company. He knows all about it. How big of a deal is it today?
It's an important milestone for a company which has so many global ambitions and in many ways touches so much of the global EV market already. The fact that they supply virtually every car producer who makes an EV, and so by raising the capital today, it just solidifies its ambitions, and particularly this money flowing into Europe, where it's going to be very aggressive in trying to boost output going forward. But all the money it is raising and all the money it is earning, this is all going towards having a better product, more innovation, and to really keep a tight grip on the market. And it's done a phenomenal job in the run up till now, and only in the last several months we have seen that pressure on the company through the tariff situation and the concerns from the US around the company's background. So therefore, it has been able to look through all of that and to be where it is today, and you see the investor reaction.
It seems like investors are shifting their focus on the innovation, the strategic technology that CATL dominates when it comes to the EV battery world. But what about the tensions between U.S. and China? We talked about the Pentagon blacklisting. Even just CATL excluding U.S. onshore institutions from taking part in this deal to limit their U.S. exposure. How concerned should we be about these tensions?
I mean, if you believe Robin Zheng and the company, you shouldn't be too concerned. And we've seen in the the Chinese EV industry, they've tried to limit their US exposure through the selling of their products in the US market, one of the world's biggest auto markets. But overall, this push forward, it's been able to, move forward ahead and expand without having to worry too much about having that US exposure all round. So I think, for tariffs in particular, CATL says they don't see much impact going forward. So I think if you believe them at their word, they should be in a very good position as investor appetite for this stock flies.
Yeah, and cheers overall. You're hearing on stage here right now, Dave. You talk about what investors are really clinging on to, right? We talk about the technology, but really when it comes to the stock itself, it's 16, 17 times earnings. It's even slightly cheaper than some of the rivals out there. If you take out the battery units of Samsung or SK Hynix. So you talk about attractive valuations, the earnings potential. The likes of Jefferies, Dave, is saying that this stock in Hong Kong can fly as much as 50%. So there might be some more room to grow.
Yeah, and I think that's a very important sort of backdrop here because, I mean, keep in mind, right, in many ways, this is very symbolic of this market coming out of, a 2-3 year range-bound, if you can call it bear market in some cases, right? Because of that backdrop of the last 2 years or so, valuations have been extremely depressed. And that's really given this really a good platform to jump. And I think I'll just borrow that phrase Yvonne just pointed out there, applaud. We're now at session highs. We're nearing 300 Hong Kong dollars a pop. We're up 14% in the opening minutes. We're now looking at 8.4. We're going at 8.5 million shares traded right now. Joining us here in set is Yun Mei, EV and lithium-ion battery analyst at China Great Wall Securities, who was, by the way, I should mention, while they were banging that gone, applauding. You were applauding and you were smiling, looking at that listing. Tell us why and what this means.
I'm so happy to see that CATL get its price because in the Asia market, it's a hard time for CATL, just like you said, the bear market. And investors in mainland, they still consider CATL as a manufacturer company. They just do not give the valuation part for its overseas project, and they are the advanced technology. I have to see that energy, material, information, they are the three key components in this world. So when AI is so high in the mainland, why the energy part, the valuation just like that? I'm very confused. So,
right. So how do we value a company then, like this? Like what do you suggest? How undervalued is CATL?
I think we now at this moment we should see two directions. First direction is the new technology, like solid power, sodium-ion battery, and the new battery system. That's the technology part. And second, we should see that worldwide people like EV and they need power battery. And the lithium-ion battery is an international product. We should see the potential in that part as well.
Now, let's look at where the opportunities are and perhaps maybe some of the weak spots here. So we're looking at cost, R&D, first mover advantage, scale, cash pile, now a bigger cash pile because of, so those are the sort of that's the bullish story.
Yeah.
What are the weak spots here you think we should be paying attention to?
We should pay attention that people are afraid of the Chinese factories. I have to say that.
In what way?
Because in the old times, when Chinese product rush into one market, cheap price, and
the perception of the Chinese brand that's coming through as well.
Yeah.
Well, I think in that case, the point you were making too is, are overseas markets going to be increasingly important for a company like CATL?
I think it will be very critical for CATL.
Okay.
We can see from the new quarterly earning report that the overseas business took around 30% of the total revenue. And for the gross margin part, higher than domestic market. It's like 29 to 22. So if the company want to have a healthy growth, they need to pay more attention to the international part.
Now, I want to understand the domestic market and the competitive dynamics there. It was arguably in recent years too competitive.
Too competitive.
The government's introduced these new technical standards.
Yeah.
What has that done? Can you just explain that to us in very simple terms? because I think it's Geely and CATL that have so far managed to get certification.
Yeah.
If you could explain that part and why that's important.
It's like in the past that when the car crashed, like 5 minutes, the battery should stay stable.
Okay.
And now it's like if the car crashed, the battery should be stable all the time. Big difference. So the low quality, low price battery companies will be kicked out naturally.
Okay, so that lessens the competition, you think?
Yeah, I think it's great relief for the disorderly competition.
It was disorderly. Okay, that's a good way to put it.
Disorderly.
What does that mean then for battery prices?
I think the battery price was unreasonable for like 3 or 2 years because the
Too high?
Too low.
Too low. Okay. Well,
low.
we've come from a high level in 2022. Then we've come down. So yeah, what is the outlook? But yes, please continue.
Yeah, for the public market, we can see the lithium carbonate. The price is jumped from $90K to less than $10K at the moment, and we can see that if the price is such low, the commercial part, it's not reasonable for more for hardworking people to work in that field if you can't get fair pay. So more and more people try to do other things. Only the last one stays like unhealthy.
Now, there's that's an important distinction because we went from 90K on price to about 10K.
Yeah.
And there's a big difference between a 30% drop from 90K compared to a 30% drop from 10K. How does that change the commerciability, the economics, if you will, for battery makers? If you could explain that, because you're an insider here.
Yeah, according to my field investigation, people from the battery companies told me that they did not count the market price for the lithium part because at list price level, they have minimum, very small impact on the total cost. On the contrary, they pay more attention to critical minerals such as gold. The Congo, they have conflicts. Just like last month, the price of the gold jumped like more than 80%. That's the key part. And then we can see from the CATL book, they told us that more than 70% of the cost goes to materials.
Yvonne, thank you so much for spending time with us. Such a big day, of course. Yvonne there, Yvonne, lithium-ion battery analyst at China Great Wall Securities. From that story, we'll now take you to some live pictures, I believe, right now of the Taiwan president at this anniversary speech, Lai Ching-te, effectively, saying that, for one, that talks with the U.S. Are going smoothly. That's so far what we've seen out of time. We'll keep you on top of the story, of course, once we do get more news lines coming through out of the speech, anniversary speech out of the Taiwan president, Lai Ching-te. And yeah, more on this, plus the other big story. We're looking at markets now rallying, in fact, after opening slightly lower. Hang Seng Index is now up 0.7%, 23.5 right now. A50 futures, 0.6%. And of course, the big story is CATL. And a very brief price check, as well as the volumes coming through on that stock. Get it up, please, for our viewers to see. 37.50 is the ticker for that one. 296, we've come off highs a little bit, but still about 12.5% to the upside there. We're now going on 10 million shares traded here in Hong Kong, the world's biggest listing of the year.
Well, it is one story and one stock in town here today, 3570 Lingde Shidai, CATL. Those shares are still popping around some 11 to 12% here right now. We're off some of the initial highs, but certainly it is a stellar debut for the world's largest EV battery maker and the world's largest listing of 2025. So certainly that's a big day here for Hong Kong Exchange. And then again, we talk about what this means for entrepreneurship, the tech sector here in China. The fact that Beijing gave this secondary listing a green light in some ways shows the government warming up with their relations with entrepreneurs and expecting the private sector possibly to help shore up growth here. But then again, we're going to talk about the prospects of that coming up here. 293 for the stock this morning, Dave.
Yep, there we go. Ning de shi dai. There we go. Thank you so much. That's a Mandarin. 3650 is the ticker for that one. Lots of good car stories this week, certainly. Right. Now, I mean, that's part of the story, right? The other big component, of course, is the big picture, is where we go with the sort of trade negotiations between the U.S. and its various trading partners. We just heard, of course, from the Taiwanese just a few minutes back with the president there that talks are going smoothly. There's the Japanese component. There's, of course, that's taking place with Beijing. And separately, of course, the updates as far as India is concerned. In fact, India is among the front runners expected to nail a tariff consensus there with the White House. In fact, you have, I think, based on our reporting, let me just look at that and where we are as far as that's concerned. Yeah, you have some automotive products have been a key issue on the negotiating table. And might we look at this in terms of phases? 3 phases. You have a 90-day ceasefire window. And then ahead of that, and on the back of that, then you have several other rounds to work out the more complicated, juicy bits. All right, let's get a sense of what it means really for one of the country's largest car makers. Joining us exclusively now is Gollagunta, Automotive Division CEO at Mahindra and Mahindra. Good morning and nice to see you. What a time to have been.
Thank you,
for
David,
you to come in.
Absolutely.
How's business?
Great so far. We've had a great F25. We did 20% growth in our SUV portfolio. And coming against a backdrop of what the industry is low single-digit growth, I think it's been a great year for us. And came across from 5 major launches that we've did across the CV and the passenger portfolio as well for us. And going into F26, we're projecting another mid to high teens growth for the SUV portfolio again. Industry is again looking at mid-single digits growth at this point in time. So far, so good.
The metric there, is that top line or number of
This is volumes deliveries? I'm talking about from a volume perspective. Revenue-wise, we are the number 2 player from a passenger vehicles perspective. We also launched 2 born electric vehicles in the 3rd quarter, and 4th was the first full quarter for us. And in the EV SUV portfolio, we're already number 1 player from a revenue perspective as well, if you talk revenue market share.
Right. Big listing here, of course, as you mentioned. I mean, it was almost draped all the way as you make your way here at CATL. But you do business, of course, with BYD.
That's right.
On blade batteries.
Yeah, cells primarily.
On cells primarily. How's that partnership going?
It's been a great partnership for us. And they're a strategic partner. And we're delighted to work with the partners, the world leaders in the cell space. And so it really helps having that kind of scale and that kind of expertise which we bring to the Indian consumers.
The fact that they could be a competitor on other, let's call it, other components and other category. Do you suspect that's going to be an issue for you, or are you happy with that partnership as things stand in that specific area?
No, again, we are all mature partners in an ecosystem. It's a strong ecosystem
that helps,
play. And we are one of the largest producers of SUVs in India. So the volume we bring in, the credibility from steady growth that we've had over the last 3 years, and the fact that our manufacturing capacity has scaled up by 3x in the last 5 years really helps bring a lot of credibility to the equation. And they've been a great partner.
What's the approach, I'm curious, of the company or the business to investing in your own battery technology? Like, where do you see the long-term trends there?
So primarily we're looking at getting best of breed technology into the country. So we pick up cells from outside. The assembly of the packs itself are done within our factory. And over a period of time, localization is on the agenda. But it's a very fluid situation with the technology at this point in time. So we'd rather be agile and get the best of breed and work with the best partners.
Now, I need to ask you about the tariff conversation. What's the hope?
No, well, we hope that we get access across other markets as well. We're producing world-leading products at this point in time. So while it'll provide a level playing field for others to come into India, and we're very open to that, we hope that it opens up for us opportunities in other markets. The UK FTA, as a case in point for us, we are primarily right-hand drive vehicles at this point in time. And so UK would be a great opportunity for us when the FTA plays out.
Is that a like-for-like change, though? If tariffs on U.S. vehicles come down to, say, much lower than the current levels, would other markets opening up be a good trade-off for you? I think to the point you're making, is that a like-for-like as far as the numbers are concerned?
So I'd rather put it this way. The product proposition is what wins at the end of the day. And we believe the portfolio we have, especially with the new born electric vehicles we put out there, a very strong proposition that we can take outside and compete against the best of the world.
Talk to us about those markets. You have the UK. What other markets do you have here?
Yeah,
right now?
primarily we're looking at RHD markets, the right-hand drive markets, whether it's UK, Australia is another focus market for us. South Africa, we've been there for quite some time. So these are markets, and eventually we'll have a calibrated approach to get to LHD markets, majorly the emerging markets at this point.
Are there certain models or categories that you think will do well as far as your portfolio is concerned in those markets?
Yeah, so we are SUV only at this point in time. And even within that, the Born Electric portfolio is what we believe positions us extremely well out there.
What milestones are you looking forward to this year for your domestic market?
Yeah, so firstly, we focused on growth, volume growth and revenue growth, and getting the EV penetration up. While the industry is at about 2.7% last year, we've had a good start this year. April was at 4% penetration, thanks to mostly our vehicles being put out in the market.
Right.
We're already at about 8% penetration within our portfolio.
Wow, okay. That's 4x the industry.
Yeah, absolutely. And so we are trying to drive that forward at this point in time, and so far, great traction and customer reception.
What would be, and I'm looking at the Chinese example, over the last 10 years, I mean, who would have imagined they have this concentration that we're looking at right now, plus 50%? What do you suspect would be the financial implications, good or bad?
In terms of? In
terms of moving into such a high concentration rate of EVs, for example. Is it a margin? Is it a supply chain impact? Just help us understand the long-term thinking there. That's quite a major shift.
Yeah. No, I think I'd rather see it as a strategic imperative we anyway have to do as an industry.
Right.
If we don't do it in India with our own products, somebody is going to come do it for us in the country at this point in time. So strategically, it's a no-brainer. We have to make it happen. The scale and pace at which the penetration happens, we'll have to watch for it. We do believe by 2030, it's still going to be a 70% ICE market from what our projections look like, about 30% EV penetration. So we focused on making sure that we have launches lined up for the next 5 years in both categories. We have about 7 launches on the ICE side, 5 launches on the BEV side. So we'll balance both of it to that extent and see how the market plays out.
Looks like you're geared up for other markets and for the future. Thank you so much for taking the time to speak with us. Nice to see you. Let's do this again soon. That was Gollagunta there, Automotive Division CEO at Mahindra and Mahindra. Right, now, we'll continue the car conversation. We'll bring back Yvonne, of course. The story is big enough to take her away from me here in the studio. And yeah, Yvonne, what's going on there?
Yeah, of course, we have to come here on CATL Day, right? We're just hearing now from Hong Kong Exchange CEO Bonnie Chen. She's meeting with reporters right now. They're doing a brief huddle here after this gong ceremony and really talking about how big of a deal this is for Hong Kong Exchange. The world's largest listing so far this year is here in Hong Kong. She's still optimistic about the pipeline. And you talk about how the share offering from CATL, it's really going to help the Hong Kong market for listings this year to surge to over $22 billion. That's according to Bloomberg Intelligence. So we're going to get the take from Sharni Wong from BI coming up in the next hour about the prospects for Hong Kong. But certainly a lot of optimism with the shares, up some 12% right now, Dave.
Yeah, there we go. So I'm just doing some rough math right now. We're moving into, as Yvonne is pointing out, right, 12.5%. We're trading at 296 a pop. We're looking at nearly 11 million shares traded. So that's quite a substantial volume and turnover coming through in the house of Bonnie Chen, who's speaking right now there at this big event, this big milestone here in Hong Kong. Plenty more ahead.
You're looking at live pictures of CATL's listing here in Hong Kong. We are live at the Hong Kong Stock Exchange, where the Hong Kong Exchange CEO, Bonnie Chen, is meeting with reporters here at this hour, talking about the world's biggest listing so far with CATL. 3570 is that ticker here. And yes, it is a stellar debut for the world's largest EV battery maker, with shares up some 10 to 11% here right now. We talk about the volumes have been quite massive as well, despite that small discount with the A shares and the ones that listed in Shenzhen, Dave. So certainly we talked about the strong and foreign investor interest in the technological innovation. They also are the champion of this EV battery market as well. That seems to be overshadowing some of the company's concerns and them being caught in the crosshairs between the U.S. and China trade tensions.
Yeah, there we go. It's a big day. Ningde Shidai is the Mandarin name here. 上了香港的市场. We're looking at $300, 还不到300港币. We're looking at that. Okay, sorry. 13.6% to the upside here. We're going on 12 million shares now traded on the stock itself. Bonnie Chan, of course, we just saw there just behind where Yvonne is at the Hong Kong Exchange, is wrapping up her remarks to the press following, really, if you're just joining us right now, the last 60 minutes or so, following a series of very high government officials here in Hong Kong, talking us through from Paul Chan to, of course, the executives, Robin Zeng, coming out of the company here, the world's biggest listing, against a backdrop of really a market that's doing okay, not blockbuster day across risk assets today. But again, we've managed to shrug off just after, let's call it a day, day and a half, if you include late Friday, the Moody's downgraded the U.S. We're now up 1% on the Hang Seng Index. We have a couple of earnings here today. Pinduoduo is coming out with earnings later today. I believe Trip.com was out. We'll talk more about those sort of idiosyncratic stories in a moment. To the macro picture, too, we're looking at, do we have treasuries? Oh, we'll get to treasuries in a moment. Rate decision coming through today out of the Reserve Bank of Australia. That's in about 2.5 hours from now. We are expecting a rate cut there, so do expect that to come through, and we'll unpack that story even further for you. A rally is still taking place, so we are extending the rally we had going into the close in the U.S. in the Treasury market, and as you can see, the long end is now just a touch or a hair below the 4.9% handle. Broadly speaking, the rest of the region across assets, gold is pulling back. We talked about the Treasury market. We did close extremely close to a bull market in the... okay. There we go. Thank you so much. So the number you want to watch on the S&P is 5980, roughly, or slightly below that level. The reason that's important is that is the level that takes the cash market back into a bull market, 20%. So as you can see, we're about 10 points short of that level. Rally across the board, Nikkei all through the TAIEX index. Bond auctions, bottom of your screen to read about that. But yeah, apart from that, it's a CATL story. Now, the other big story, of course, coming through out of Taiwan, and we did hear, of course, from President Lai Ching-te, let's call it 20 minutes back, in that anniversary speech, talking about how the negotiations are going smoothly with the U.S. Now, all that in mind, you have the Chinese government accusing the Trump White House of undermining recent trade talks in Geneva with its warning that using Huawei's AI chips anywhere, that's the operative word, would violate export controls. For more on that, let's bring in Annabelle Jewelers joining us out of Taipei, in fact, with a story. Belle, yeah, what do we know about that?
Yeah, well, Dave, I think you hit the nail on the head then when you said anywhere is the operative word. But just to pull back a little bit and talk through the context of this. So what Beijing is accusing Washington here is putting the progress that they made in Geneva, those sort of high-level trade talks that we had last week, putting that in jeopardy. And the reason they're saying that is because the U.S. Commerce Department came out with a statement last week saying that any company that's using Huawei technology anywhere in the world is violating U.S. export controls. And the justification they're using for that is sort of an assumption that the U.S. is making that Huawei would have used American technology to build its semiconductors. So it's not really a new rule that the U.S. has issued per se, it's more just an interpretation of the guidance that's already in place and the regulations that are already in place. So they're saying that if companies do choose to use Huawei technology, they're pointing out the Ascend chip in particular, then they could actually face criminal charges. So obviously there was pushback to this from the Chinese side over the past few days. The US has amended their statement by removing that reference to anywhere in the world, but still their position does seem to be staying the same.
Belle, these changes, were they enough to appease Beijing?
Yeah, that's right. I mean, it still seems like there's been communication over the past few days. In fact, Beijing just put out a statement overnight saying that it had communications at all levels of US government to push back on this stance from the US. So, as I said, Beijing now has put out a statement saying that Washington is really putting that progress at risk that was made in Geneva last week. And so we did actually reach out to the White House and to the US Commerce Department in particular for comment on this. We didn't get any response, but it is just another signal, I guess, of how fragile the relationship is right now between Beijing and Washington.
And Belle, just what's happening there at Computex, I guess, slightly away from the geopolitics of things, and certainly one of the focus areas there is the integration of AI into various sort of applications and industries. And you're there, I think, with a person who can talk exactly just that.
Yeah, that's right, Dave. I think it's really interesting. There's sort of a couple of different conversations that are going on at Computex. First, you've just got geopolitics, and of course, aside from very well-known names like Jensen Huang, for instance, Donald Trump, I'm sure, is factoring into a lot of conversations here. But then as well, there's the progress that's being made in AI, the integration that we see of AI into various different industries, so things like smart manufacturing, for instance, humanoid robots. Well, let's get more on that now. Bring in Linda Tsai, President of Intelligence Systems Sector at Advantech, joining us this morning. So Linda, thanks so much for making the time. And we were saying earlier, this is the first time that Advantech is back at Computex in 12 years. So why exactly did you think this was the year to return?
Thank you, Neville. I think it's a very good question. Is that Advantech has not been Computex for 12 years. It's because in the past it's more like consumer. But we see the AI, especially AI in the past year, talk about AI on the server. But we see AI deployed at the edge is around the corner. So we think that it's a great opportunity for Advantech to come back to Computex to demonstrate what Advantech is doing at the edge computing, the edge AI, to help industrial customers deploy AI quickly at scale. Yeah.
So talk us through that application then, the so-called edge and that move to the edge, because we talk about it in a range of different industries, but I mean, the customers that you work with, they're very well known. So NVIDIA, for instance, how is that partnership exactly playing out?
Right. NVIDIA is really a cutting-edge development for the AI, right? And they developed great technology. As Advantech, I think we are a great partner to work together to bring their technology together in bed with the domain focus of industrial customer need to provide the end product solution to customer. Because we focus on a diversified industrial application that you mentioned, smart manufacturing, including that we have healthcare, power and energy, and for those areas we see they are eager to deploy AI to speed up their innovation at the field. Yeah.
So one of the sort of question marks that's come out this year is the application or the move to the edge in devices and in smartphones, in particular PCs. And some people would say maybe that's been a little bit slower than anticipated. But when you talk about edge and you apply it to industrial needs or uses, do you see that happening at a faster rate?
I think it's all come from the demand. If you talk about smart manufacturing, I think smart manufacturing, there's increasing need for AI. The reason is because of security, sustainability, speed, and scalability. And we talk about that the factory will be built all around the world. But if we face a lot of labor shortage, how can we resolve that? That's AI play the role on the smart manufacturing. I'm not just talking about humanoid robot or AI-enabled robot that can help to resolve the shortage of labor. I'm also referring that on the production line, we need to increase the efficiency. By AI technology, we can increase the inspection rate to make sure that the yield rate is higher. And more important is the security and the safety. In the factory, worker safety is very important. By AI technology, together with NVIDIA, Advantech, and with our eco-partner, we are able to embed the smart video analytics among the factory to ensure the worker safety. Yeah.
And so, which industries, are there any particular industries that you think are really ripe for this kind of innovation? Any sectors that you're working with in particular on that?
Yeah, I think at Computex, people will talk about robotics. So I will organize robotics. It's been different. One is that we call the AMR, just that in the warehouse that you move things around, autonomous robot. That's a very fundamental one. They need the AI with the sensing. But second level, we say is cobot, which means it's a moving robot with the arm together. You are able to pick up something, and that's very important for industrial customer to resolve like difficult job. Like also, if you see that factory, they implement a lot of this kind of cobot. But last but not least, the humanoid robot. I think it's still very new, but I'm sure that another 2 or 3 years, the technology will evolving because on the humanoid robot is more like a brain. And thank you for that generative AI and physical AI. It's helped that the humanoid robot to make it real into life. But when I say to life, maybe not really to life, to like your family, my family, I'm really talking about that in the factory, the factory space, yeah.
Humanoid robots in particular, I mean, and this is going to get more into the geopolitical territory now, but China has really developed a big lead, it seems, in humanoid robots. What's the catch-up that you're seeing, and which region or area is better placed to compete with innovation from China?
This is not an easy question to answer, right? Indeed, right now in the human robots, I think there are two big regions. US and China are really leading the development of human robots. But I also see in other countries like Japan and Europe, they're also catching up. So in terms of that, the human robot ecosystem, it's not just where the manufacturer made the human robot. It's more about the ecosystem, because it's that you need all the sensing embedded around the human robot. So that's where the ecosystem from different countries is also very crucial. Yes. Yeah.
One last question, and this one's more related to Qualcomm. One of the big announcements that they've been making at this conference is their shift into new business lines. What's your partnership with them right now?
The partnership with Qualcomm is on embedded side. We know Qualcomm started go to AI PC last year, and they are going to the AI server. Instead of that, the commercial-wise and consumer-wise on the PC and server, Qualcomm is actually take another step to go to the embedded industrial customer, where they want to work with Advantech together to embed the product in the different fields like healthcare, robotics, industrial, and power energy. That's where we cooperate with Qualcomm on the embedded application.
Linda, thanks so much for your time this morning. That was Linda Tsai there, President of Intelligence Systems Sector at Advantech, and David back at Computex for the first time in 12 years.
Okay, yeah, and won't be the last, I think. Yeah, so I'm alone here in the studio today. Belle's not here, Yvonne's not here. You can see them, but they seem so quiet here in the studios today. Anyway, keep me company, guys. For our Bloomberg clients, you can watch us live on your terminal. TV Go takes you to that. Yeah, I'm very needy. In fact, I need some water as well. You can watch and some of the interviews you might have missed and be part of the conversations coming up as well. There's a nice autos EV battery conversation taking place, and the news gods have rained blessings upon us today to help us carry through those conversations. And lots more on the way here on The China Show.
All right, checking CATL shares here in Hong Kong on this debut, and we continue to see the shares edge higher, close to 13% on the first day of school, and certainly a lot of optimism around this stock, Dave. And it was interesting, Bloomberg Economics geopolitical analyst Mike Den had a very interesting take on this whole listing. The fact that this was, them looking at global capital without the support from U.S. investors, given that they excluded some of these onshore institutions from taking part, is a good sign that maybe they can still look and raise money without the help of U.S. investors. He calls this listing a litmus test of financial decoupling between the U.S. and China. But certainly today, it seems like that strategy has paid off, Dave.
Financial decoupling. Okay, I think that's a phrase I scarily suspect will feature into our consciousness quite far more frequently than we would want. But it's certainly the reality of the day. Yeah, to Yvonne's point, CATL is just a second, 258. That's okay. Okay, that's the onshore listing. For a moment, I thought, what happened with the stock? Because we were flirting with 300. So just to make it clear, of course, that's the onshore listing. The listing here is doing much better. 13%, 297. The high of the day was 299.80. Nearly 13 million shares now traded here. Now, the read-through across from that story to the other big conference taking place here, one of the other big conferences certainly taking place here in the city is the BNP Paribas Global EV and Mobility Conference taking place here in the city, and certainly a closer look at a European EV pure play Ampere, and the company does EV production for Renault and other brands. That's a background for you, working with partners, including, of course, CATL. We're joined here on sets. Ampere CFO Vincent Piquet is here to join us and talk to us exclusively about their plans and updates. Very nice to see you, and welcome to the region, first and foremost.
Thank you for having me.
So what are you busy with? What's cooking in your kitchen?
So the big focus for us is obviously to compete on price. We have a great lineup, great products that are doing quite well in Europe right now. We've launched Renault 5 last year. We're about to launch Renault 4, so below 25,000 euro. And then we're attacking the A segment with a Twingo coming out next year. To be able to compete in Europe, it's all about reducing costs. And so we're making a lot of efforts to reduce costs. And in an EV, the biggest element is batteries. So that's where we're focusing. We have a commitment, and we're on track to go from the current C segment car in the street to the next generation one, down 40% in COGS.
Wow.
So that's a significant reduction. But the EV segment is a very young technology. And so we see the opportunity, and we're working with our partners to actually achieve this. And a lot of these benefits will go to the customers, who can get great products for a lower price, and while maintaining profitability, obviously, and profit for Ampere.
How do you remove cost? Just talk to me like I'm a kindergarten. I'm in kindergarten. How do you remove cost from as much as 40%? That sounds like it's easy, but it sounds extremely difficult to do.
Yeah, in the car industry, it's unusual, but in the EV space, it's quite common, in fact, because the technology is very young. So if I take batteries is 40% of the cost of a car, and the technology is changing really fast. In Europe, everybody was using a certain kind of chemistry, and it's changed, leveraging what has been done in China. So we're moving from NMC to LFP, and that allows for lowering cost of batteries in a significant manner. That's the chemistry, then there's a geometry, there's a way the battery is integrated into the car, the way it interacts with the electric motor and the battery management system. A lot of steps in terms of how we manage this technology is still young, and all the engineers and all the OEMs in the world are working towards reducing this and optimizing it to get to an optimum that will come in a few years. That will be a little bit like in the ICE part of the industry, where the technologies are much more stable, and when you do minus 5%, you're very happy. In the EV space, you need to go for something like minus 40% to stay in the competition and have products that stay ahead.
That's an extremely tight sort of. One of the conversations one of the parts of the EV conversation that keeps coming up here as we talk to, say, some of your partners in China and maybe some of your competitors as well, is all the innovation is shortening product cycles, innovation cycles, and I'm wondering how that is affecting how you plan your business, because it seems things are just getting shorter. Good for the consumer, but I would imagine it's hectic for you guys.
It's intense. So the acceleration is very clear for us, and we're very proud of this. So the Twingo, which will come out next year, will have a development cycle time of less than 2 years, 21 months, which is on par with what we see in China today. And actually, there's a derivative of the Twingo that will be launched for Dacia that will be developed in 17 months. So we're very strong on that cycle time. We used to be at 3-4 years, and in just a matter of a few years, we've been able to accelerate. The way we've done this is we are learning a lot from what's being done in China. We've established
a center there.
Exactly, development center in Shanghai, so the Advanced China Development Center, and that allows us to study the ecosystem, to study the engineering processes in China, and we're learning a lot, and we're incubating this in Ampere and applying it to our cars. And so you go from Renault 5, great product, great car, but 3 years cycle time, to Twingo, 2 years, less than 2 years, to the next derivative for Dacia, which will be 17 months. It allows us to reduce cost, to go faster, to stay closer to the market, and that's a key element of competition today in the segment, in the EV sector specifically.
As CFO, what does it mean for your margins, though?
It's really important for me. The less the engineers spend time on a car, the less cost there is in the car.
They need to spend time on the car, though.
They do, but as long as the product is as good as it will be, Twingo is a great product.
Right.
I'm fine if they can do it faster.
I think these are pictures of Twingo, if I'm not mistaken, here on the screens.
Yeah, that's right.
That's it.
That's the Twingo, which is basically a modern reinterpretation of an iconic car in Europe from the 80s and 90s. This is a car that changed the approach to the A segment in Europe, and this is now the electric version. And that's bound to be a huge success. This one is the blue one is a Renault 4. The green one, yeah, is a Twingo. So, and really for the EV sector, what you need to understand is EV cars are more expensive today, and everybody's working towards getting towards a price point that makes it much more accessible. So the C segment is very crowded, lots of big cars, everybody is there, and we're the pioneer in terms of getting towards smaller cars that are cheaper and more accessible. And the B segment is the heart of the market in Europe. And we have products like Renault 5 today that are really very successful because it's a unique offering, very stylish, great product at an affordable price. And Twingo is the next step for that.
Very quickly, final question for you. When are you going to break even?
This year. So that's our
track for
commitment.
that. Okay.
And we're on track for breaking even this year, which in the EV space is really, really important. And so through our products and all the software activity that we have in Ampere, we're able to get to break even this year.
Thank you so much for taking the time to speak with us.
Thank you for having me.
Ampere CFO there, Vincent. Piquet on the latest, and yeah, all the good stuff coming through in Europe. Watch out for that. Plenty more ahead here on The China Show. Welcome back. You're watching the CATL show, the China show. CATL is a big story, of course. Just other things that's taking place right now. The NDRC, that's China's National Development and Reform Commission, is out with some updates here in terms of, well, for one, they've approved 27 fixed asset investment projects. That's an update from January through to last month. Number two is that most policies have been to be implemented before the end of June, so in a couple of more weeks, and they'll be speeding up, stabilizing both the economy, and alongside that, of course, employment is a part and parcel to that story. That's according to spokeswoman Li Chao saying in a briefing as I speak right now. That's an update as far as the macro picture in China is concerned. Chinese currencies to the upside. They did cut rates earlier on, of course, as far as the loan prime rates 1 and 5 year concerned. Benchmarks coming up on your screens, 0.9% to the upside. A split on the Hang Seng Index, 55 up, 27 down, 1 unchanged. Plenty more ahead. This is The China Show.
A.m. in Tokyo. Japanese markets heading to lunch break as well. Yeah, I'm at the CATL listing, so you hear a lot of bankers cheering still. But they're not cheering about Japan in particular, but more about CATL. But yes, Japanese shares are up some 0.5% here today. It is a lot of optimism, maybe perhaps around less concerns over this U.S. credit downgrade that really lifted the S&P. So Japan seeing a sense of relief here this morning, Dave.
Yeah, for a moment there, one could be mistaken of the exuberance around the upcoming 20-year JGB auction coming through here in Hong Kong, which I imagine isn't the case. In any case, we live in a globalized world and connected world anyway. What you're looking at on your screens, okay, apologies, I'm having trouble with my glasses today. What's that? Okay, is it here? Okay, this is the 30, okay, this is the 2, 5, 10. Do we have the JGB board as well? Anyway, we'll talk about the JGBs in a moment. There is a 20-year bond auction today. There's an auction as well in the Philippines, in Oz. There's also a rate decision, which we'll get to in a moment there. Oh, thank you. There we go. So we're down a little bit, but we are, of course, have been testing highs in recent weeks. 241 on the 20-year, and as you can see, let's call it 3.5% on the 40-year. Right, now back to the Treasury market, if we can, please, all the way down to 30-year and... Okay, what's happening? We're on FX now. Are we doing FX or are we doing Treasuries? Can we do Treasuries, please? I want to talk about Treasuries. You know why? Because the big one overnight was the reversal in yields. If you thought we were at 5%, that seemed to be a window, a buying opportunity. 30-year yields are down to now back below the 4.9% handle. Okay, Yvonne, why don't I bring you back in? Because the big story today is in this big listing where you are. There at the Hong Kong Exchange. Is Yvonne there?
Yeah. It almost seems like it's the only stock to really watch here this morning, right? The stellar debut from CATL, the secondary listing here in Hong Kong, and really cementing the company and the growth prospects that it really wants to have internationally, right? They talk about the amount of factories that they're building in Germany and Hungary, and they want to build up this whole EV battery materials supply chain in Indonesia as well. So all these moves seem to point to them trying to avoid at least the U.S. tariff impact and really get into markets that are more profitable than China. Of course, we talk about the EV market there, highly concentrated, fierce competition. So certainly they're looking to diversify, not just when it comes to the markets, but also how they're getting their capital, right? They want to introduce foreign investors to get a hold of this stock. Let's get more take now from our Bloomberg MLive strategist, Mark Cranfield. He joins us live from Singapore. And Mark, obviously it's a big day for Hong Kong. Talk about the CATL sort of impact on this market in the next 3 to 6 months or so.
Oh, this is a huge relief for everybody, especially for Hong Kong, who obviously would like to do some more IPOs. I mean, as Shu Li Ren was writing today on Bloomberg, it's also about re-establishing Hong Kong as a financial center. So we really needed a big and successful CATL issue. It's good that David brought up the Treasury yields earlier, because that's also part of the story as well. Can you imagine, yesterday there was a lot of angst about rising Treasury yields and the impact that it may have on global equities, not just on Hong Kong as well. Thankfully, there was a big reversal in yields late in the day. In New York, yields came down. That diluted the impact there. Equities in the US finished strongly. Today, we get a very nice opening for Hong Kong stocks boosted by CATL. Can you imagine if we still had the Treasury angst from yesterday coming today, just as this big IPO was debuting on the exchange here? Institutional investors would have been in a very difficult situation. They would have had to consider trimming the big holdings they have rather than topping up. That's an enormous difference. Rather than having a stock up 13%, you could have had a stock down 10% easily, because institutional investors have to make very fast decisions of whether they want to be in or out of such a major stock as this. As it happens, everything is all nice and calm. They're able to top up. And even retail investors may be considering whether or not they can take profits early or hold on for a bit longer. It's a completely different dynamic, and it changes things for the future as well, because if you get a solid start to a very big IPO, it sets the tone for the months ahead as well. What happens in the first 1 or 2 days really is very, very important, especially for a major stock, as this one is going to be. It's going to become a pivotal stock in the Greater China market. So all eyes are on this. It's had a very good start. That is very significant for Hong Kong as a financial center and for the performance of Hong Kong stocks in the weeks ahead.
Okay, Mark, so this good milestone, and not to put it behind us, but I want to ask you now about the Treasury market. Can we put that story on the long end behind us right now? The pressure we saw this time yesterday, 5% seemed to be the line in the sand when buyers came in, maybe slightly above that. What do you think was behind that bid? And yeah, can we put that story behind us?
Not completely. 5% level on 30 years would have been attractive to people like big insurance companies in the United States, some of the long-term portfolios. What's also driving it in the background is not just the Moody's downgrade for the sovereign rating of the United States. It's also this tax and spending package, which the U.S. administration is trying to push through. It looks as though it's going to go through the Senate. It will probably be enacted into law eventually. There's a bit more work to do on that. But they do have plans to push this very big package through. There's a lot of tax cuts in there. There is some increase in spending. In the short term, as Moody's were warning, it probably makes the fiscal deficit worse for the United States. Eventually, if growth comes through the right numbers, then it will start to help. Tax revenues would improve in the future, and that will be good for the bond market. But in the short term, it is clearly a negative, and that's partly what you were seeing in the set-off yesterday. Now, we might get secondary impacts from this. We're likely to see yields creep lower, providing it's in a contained way, providing yields are going up in a gradual process. Then traders and investors will not be so concerned as they were yesterday when it seemed to be spiraling out of control. As long as it's steady and the Federal Reserve is not unnerved as well, then that's all good and the markets can cope with it. Equity market won't be too concerned, especially if the overall mood is pretty calm elsewhere. Foreign exchange markets are not doing too much, so there isn't a big follow through in other asset classes. So really the Treasury market is very important, but as long as yields go up in a gradual manner, it's not too destabilizing for equities.
Mark, the RBA in 2 hours from now, it's a big day. Yvonne, as you saw, Yvonne was hard at work at the exchange, so I'm getting burgers in. How much mind space should I carve out thinking about the RBA, which happens around lunchtime, or can I focus on our burgers?
I think make sure your burgers are well done, because you might have to sit there for a little while waiting for them. The RBA is the outlook, really, which is the key here. Everyone's expecting them to lower interest rates today. That's not a surprise. It's really what they have to say about going forward, whether or not this recent jump in the inflation data, is that a shock to them, or were they pretty much factoring that into their calculations already? If they were prepared for that, and if they think that inflation is going to be sticky but not too bad, then they can probably give guidance that, yes, rates can continue to come down. As our survey expects towards the end of the year, we're still looking for rates to come down to the low 3 area by the end of this year. If the RBA gives that kind of guidance, markets will probably be happy with it. Aussie dollar can take it in its stride. No big disruptions. The shock to people today would be if the RBA make it look as though it's a one and done type situation. If they cut rates today but say, hey, that's it. We need a long time to pause here. We don't really know what's happening with trade tariffs. We think inflation is getting a little bit too hot. We need to sit back for an extended period of time. That would be a surprise, and that would be something the market would find a little bit difficult to digest.
Okay, not like my hamburger and Yvonne's hamburger coming up. Mark, thank you so much for the context there. Mark Cranfield in Singapore for us on the big market story, CATL, the Treasury market, RBA coming up in just under 2 hours from now. Right, benchmarks across the mainland and here in Hong Kong, we're now at session highs roughly at about 1% on the Hang Seng Index and Hang Seng Tech. Within this space, a couple of movers to tell you about. We'll start things off here with some of the healthcare names here on the screens very shortly, and we're looking at... Oh, we don't have the healthcare names. Do we have them? I saw them earlier on. Anyway, Xiaomi. What do we get? Okay, Xiaomi, the story there... Okay, no, I'm being told healthcare is coming up. All right, sorry. This is live TV. We're looking at 3SBI leading some of the healthcare shares to the upside here. This packed with Pfizer, 37% up. You'd almost think it was CATL if you had a closer look. Okay, the other story is Xiaomi, and some lines coming through here out of late June earlier on here that the company has begun mass production here of one of its chips, X-Ring. 01 is what it's called, 3.5%, one of the big points movers and certainly percentage movers here in the Hong Kong market. Okay, let's talk about the other major story amongst the sort of still a handful but multiple major themes taking place. We're looking at live pictures. These are live pictures, are they? Jensen Huang joining Hon Hai Chairman Young Leo delivering a keynote in Taipei at the Computex 2025. And yeah, it looks like they're having a a conversation in what I can hear to be English. So, yeah, we'll get you guys updated on what's taking place there once we have more beyond the spirited banter, which looks to be the case currently. All right, plenty more ahead here. Everyone's happy today. This is The China Show.
However, if you study with me every Sunday, I promise you'll get straight A's.
Welcome back to shows. Could be wrong, but I think CATL has made a debut in Hong Kong today. In case you missed the big story, 12%. We've been testing near the 300 Hong Kong dollar mark. We've so far haven't managed to break through that, but I mean certainly it's come a very long way, as you can see there from the 263 listing price here in the city. It's raised $4.6 billion, world's biggest listing this year so far. Let's tell you a little bit more about this. This is a Chinese company, is the world's largest maker of EV batteries. Last month, of course, the chief tech officer, Gao Huan, unveiled an upgraded version of its battery that offers, get this, 500, in case you missed it, 520 kilometers of range in just 5 minutes of charging time, beating rivals such as BYD.
By the end of 2024, Shenxing batteries had been deployed across 39 vehicle models from the 16 automakers. This year, we are set to power over 67 new models, truly bringing the super-fast charging technology within everyone's reach.
Now, just in terms of the market share there of the company, right, over 35% of the global market, supplying domestic and international brands from Mercedes to Honda and also Tesla. Still, though, China does make up the vast bulk of sales, with the U.S. and China coming in a very distant second and third here. And the U.S. Defense Department has blacklisted the company over alleged links to the Chinese military, and the accusation, of course, that CATL has denied. And despite that, though, the firm went into this secondary listing. Strong cash flows. It intends to use much of the proceeds to fund this planned $7.6 billion expansion in Europe and gain greater exposure, Yvonne, outside its home market in China.
Yeah, and what does this all mean for Hong Kong in particular here, that they were able to land this world's biggest listing so far this year? Let's get the outlook here and bring in our Bloomberg Intelligence Senior Diversified Financials Analyst, Sharni Wong. Obviously, it's a big day. What do you think is going to be the outlook for mainland IPOs now here?
Yeah, it's been such a good day today, and I think going forward there's going to be a lot more companies that want to list in Hong Kong. The regulators, they have been so supportive and forthcoming with approvals. So over the past 2 years, they have already approved about 300 companies to list overseas, whether it be Hong Kong or the US. Actually, mostly in Hong Kong, about 2/3. And then there's still about 150 in the pipeline. So that pipeline will likely continue to strengthen, given the strong debut today. So the outlook is very positive for Chinese company listings.
We've seen a lot of secondary listings. We've seen some delistings of Chinese companies in the U.S. and coming back closer to home. Is there a risk to that in any way?
I think Hong Kong will probably benefit from that risk. So whether the ADRs may eventually be delisted or not, there is a risk, with the White House, putting pressure on that. Our government analyst said that it's not a high priority for the SEC at this stage. But regardless, these companies need a plan B. So, companies like Pinduoduo, PDD, Futu, they don't have a secondary listing. They really need to get a move on pretty much, right? And then for the companies that do have two listings, like Alibaba, for example, we're seeing pretty rapid trading migration from the US to Hong Kong.
And tell us a bit more about what's in the pipeline right now in terms of unicorns. Are we seeing those here in the city?
Yes, I think over the past 2 years, there's been a dearth of unicorns, and that's pretty much because of valuations. So, now with the markets picking up, we do think that, now is probably a better time to come to the market. And so, for example, companies like Lala Move's parent, they have already applied for a listing in Hong Kong as well. And then there's also some news reports about Ant potentially listing their international subsidiary potentially in Hong Kong too. So, we are starting to see, signs of a pickup of the unicorn pipeline as well.
Tell us a bit more about what this means for Hong Kong, the exchange in particular. With a big listing like this, what should we expect in terms of stock turnover?
Yes, so we have seen stock turnover soften in recent weeks, but it was pretty crazy in the first quarter, right? So it's normal to expect some type of moderation. But longer term, we are very positive on the outlook. And actually, when I check consensus, they're expecting about 187 billion Hong Kong dollars ADT. It looks far too low, in my opinion. Beat at least by 13-15% quite easily. And with all these listings, right, what does that drive? It drives subsequent turnover. So the outlook for Hong Kong Exchange is definitely very positive, and we do expect a very second quarter result coming up in July and August as well.
Coverage there, Yvonne on the ground, and of course Sharni Wong, who oversees, of course, our coverage at Bloomberg Intelligence, Diversified Financials. From that specific aspect, let's talk about autos here specifically and what this listing actually means then for the company, for the industry moving forward. Let's bring in Joanna Chen here with us on sets, our autos analyst, to talk us through this. So let's start with the listing. They raised quite a bit of money.
Yep.
What are they going to use the money for, and what do you suspect that's going to be useful for?
Well, the largest benefit that CATL will get from this Hong Kong listing is actually a broader investor base and also better access to foreign capital in terms of like when they're trying to expand and also invest overseas. So yes, the listing will bring a lot of cash, $4.6 billion and up to 5.3 if the overallotment is fully exercised. But the most important thing is that the proceeds will come in Hong Kong dollars, which will be much more convenient and also efficient when they try to invest in overseas factories versus their onshore cash in Chinese yuan. So that's a huge boost for CATL, and 90% of the proceeds will go into the construction for its Hungary factory, its second factory in Europe that will help bring its overall European local production capacity to a similar level to LG versus its largest rival, LG Energy Solution there, and also even higher over the long term.
And it was spared the heavy discount on the Asia market, right? And I guess part of that now goes into, I think we're up 13%. There's clearly strong demand for the stock today. Can we expect demand to continue to be strong and keep, I guess in many ways, share prices looking very decent?
Yeah, we definitely saw a very strong session for CATL's Hong Kong shares this morning. Yeah, that really reflects that the investors' high expectations of the company going forward and confidence in its business outlook as the world's largest and most importantly, most profitable battery maker in this space. If you think about it, like CATL has more than 35% share in both the EV battery and also the energy storage battery market. And that means 2 to 3 times higher sales volume versus its closest rival and multifold of revenue and profits and over the long term R&D resources to help them sustain this competitive advantage and also keep driving the technology innovation. So that's where the investors are betting on, and we do see CATL's fundamentals going very strong both in the near term and also over the long term.
Now, the looming issue is the exposure to the U.S., right? Whether that's the Pentagon blacklist or the tariffs. What's the impact to the company, and what are they doing to work around that? Or do those things matter, actually, to the company itself?
So that's a very interesting point. So the Pentagon blacklist itself doesn't serve as a direct ban. It's more of a warning to U.S. companies and investors of possible ties of those Chinese companies to the militaries, but which, of course, CATL denied. So it's not really a direct ban. And as for the tariffs, the company said itself that the overall U.S. sales only accounts for a low single-digit mix in its overall battery sales. So for now, we're looking at very modest tariff impact. But of course, everything add up together, it's huge. There are huge policy uncertainties around the U.S.-China geopolitical tensions, and that will affect CATL's U.S. expansion. It's more of a wait-and-see situation. We are seeing that CATL trying to work around with, for example, technology licensing instead of direct ownership of the factories there. But still, it's a long way to go, and we have to wait and see. And hopefully, they'll make progress.
Joanna, fantastic. Joanna Chen there, our Bloomberg Intelligence Asia auto analyst, with what the company is doing with the money and where they're doing it. Plenty more ahead. This is the China Show.
This listing signifies our deeper integration into the global capital markets and marks a new milestone in our mission to drive the global zero-carbon economy. CATL is not just a battery component manufacturer. We are a system solution provider and are committed to becoming a zero-carbon technology company.
There we go. CATL, Robin Zhang, speaking earlier at the stock exchange right before, of course, they took a lot of pictures, had a lot of fanfare for very good reason. World's biggest listing, doing extremely well today, up 13% last we checked, 13.5 now, 13.25. We're now trading at 297, 298, which is very close, but not at the highs of the session. In fact, let me just mention that as well to you and what that looks like in terms of the pricing today, right? So again, if you're just joining us right now, this is our big story today. The IPO, listing price 263. The high of the day so far was 6 minutes into the session at 299.80, and we're just coming off a little bit off highs today. But as you can see, I think, and it would be quite a big one if we did hit 300 today. We'll see. We'll see. Anyway, the night is young, and so is this listing. 13.23% to the upside, and we're now nearing 15 million shares traded in the first hour and a half of trading. The rest of the markets, though, are actually doing quite well. And when you look at the benchmarks, up 1%, coming off that, a little bit coming off highs there. Just to mention, too, and separately, there's an NDRC briefing taking place right now. And by the way, very interesting lines here coming through. Material, I would believe, if we have more details on this, I think for one, they're looking at to eliminate, they're promising to get rid of this rat race competition. They're looking to speed up market access conditions. They'll come up with more realistic market access criteria are the latest lines that have come through as well. So, yeah, we'll get more on this, of course, once we have more details on this, perhaps next week. And apart from this, in the next hour, just very briefly, watch the HIBOR rates. Continued to see some downside right now. So 3-year lows in this. 119 was the last one. We'll get an update in 15 minutes. Plenty more ahead. That's it from us, and we'll see you all tomorrow.